All right, so 4 scenarios. I'm going to do, one thing I love about football is I love the schematics of the game, right? Especially if you watch football and you see announcers. And you listen to great announcers, right? I watch a little bit, try to put on the Cleveland game. I want to hear Tom Brady. I want to hear some of the stuff he says, right? And so some of them, they give very good insight on the game. For example, they'll say, oh yeah, you needed to get the protection right. They didn't realize that this person was coming and you got to move. So as a quarterback, you got to move somebody on the line to get this person that's blitzing or this rush or this, whatever it is, right? They didn't do his progressions right. They didn't find single coverage. They threw into double coverage because they didn't read the defense properly, right? So some of these things, when I ask you, I want you to know, and some of you have heard it before, but you might be out there and, you might forget, or you might not be that well versed. So when we sit down with somebody, there are, and write it down, okay? I don't want you blurting it out. I'll call on people in a second. When it comes to insurance and we start talking about life insurance, there are 4 scenarios that they have, right? We call it the insurance quadrant, okay? This is different from the 5 big mistakes of life insurance. Okay, so write down the 4 different insurance situations. And when you have all 4 written down, raise your hand. Okay. If you don't know the 4, raise your hand. Okay. Robert, what's 1? Do you have 1?
Group insurance.
Okay, group insurance. There you go. Group insurance is 1. Okay, who else didn't have them written? Ali, what's the second one?
No insurance.
No insurance. Okay, so they might have group insurance. They might have insurance provided by their employer. Ali says they might not have anything. They don't have any insurance whatsoever. It's the third one.
Cash value.
They have cash value insurance. They have permanent insurance. They have whole life insurance. They have IUL. They have VUL. They have flexible premium adjustable life insurance. Or any sort of variation of cash value insurance. And what's the last one?
Term insurance.
Term insurance. They could have term insurance, right?
Yeah.
Okay, now, so now, okay, again, another exercise. If you're there, okay, what do you want to see? What do you think, if you had to rank them in preference for all of it, just, okay, how about this? And is making a sale, getting this family protected with Primerica life insurance, what would you prefer to see? What are your preferences? No, did I say shout it out? No, because I want you to think about it. I'm not angry, I am angry. But I want you to think about it, okay? This is why. It's not just trying to get the right answer. Okay, so list those.
Can you reword it? Can you reword what you're trying to get us to do?
Okay, so you know the four that you have, the scenarios, right? So list them on what you prefer to see, right? So like say, I heard a bunch of people say no insurance. So if to get a sale, would you say no insurance, then rank them? Then cash value, then term, then what was the last one I guess? And then group. Okay, you follow me? Okay, raise your hand when you're done. Okay, give me your ranking.
The ranking will be cash value.
Okay, hold on. So 1, cash value,
Second, term,
term,
group, and then non-insurance.
okay. Okay, that's what Ismailo said. What do you say, Val?
I said, cash value group, no coverage. That was the-
Cash value.
And then.
This is what you prefer to see, right? This is what you want to see. The easiest path to get a sale. That's what we're saying?
Yeah.
Okay. So you go into the client and you say, if they have cash value, that's my best chance. That's what you said? Okay. Right? What else? Then what?
And then group, and then no coverage. So that's-
So she said, cash value, what? Group. Okay. Then what?
No coverage.
Okay, no. And then what? And then term. What'd you say? Yeah.
I said term, cash value, group, and no insurance.
This literally could be, you can't be more wrong. It's literally impossible.
It's the other way around.
I think anybody from the street, they would pick 4 inventable.
That is hilarious.
Okay, all right. So I think we can all agree, except for Xander. Cash values first.
Oh my god.
Now, and I mean this. Don't write it out. Don't write it out. I'm gonna let you stand on business. You can defend what you're saying in a minute. Okay, I mean that. I want you to see. Okay. Ismaldo, why do you think cash value won?
Because it is easier to get a better proposition because I can either give more coverage or also I can give us a choice because most people that have cash value, they want it for the savings and I can give better options. I have more ammo.
Okay. So, and then I would. Does anybody have anything to add to that?
They believe in private coverage.
Okay, they believe because they're paying.
Yeah.
Okay, so they're putting their money away every single month. They're paying money, and you're right. It's a far inferior product in every area. It's more expensive. You have less coverage, and the investment sucks. And so when you read through it with them, and then you can, Art Williams, the founder of our company, said it's very easy to exchange dollars because they're paying $300. Now they pay $50. That's not, if I can give you more for less, that's not a sell. You're not selling it. Okay? So I think if I had to say, cash value is number 1. Why would you say term is number 1?
I think it's a easier process. Like if they have cash value, it's a longer process. Like you have to cancel things. I think it's quicker if they have.
They don't have to cancel their term.
Well, no, they do. But I think if they have term, they already understand cash value is bad. And if they have cash value, they might be a little more hesitant. But if they have term, and I can just save them money, I think they're
Can
more
you
likely-
usually save them money
Yeah.
on term?
Usually. Or we have a longer term or whatever.
Yeah.
What the boys got?
Yeah.
Term is very hard to replace. Okay, it's the hardest. Okay, love the attitude. But in terms of this, term is the most difficult. Okay. Now, why did you say term second?
For me is because most terms are very vanilla term, and when I'm able to show the terminal illness rider that also after the coverage 20, 30 years, I can get the extra coverage because I can do decreasing term, or I can then make them renew if they need to. So when I add all of that, they see to me like the value because they didn't have all of that stuff. Because they always worry about after 20 years gonna help a lot, and then when I show those options, they usually like it and they change. I'll change people that are paying $50, I make them change to 80 just for
A better product.
better product.
And you think that's the second easiest?
With group, to me, I guess yes, because some people that in the markets I've gone, when they have group, sometimes they're like, they think their job is so good, even if you can show them, it's harder process for me, I guess. Maybe for other people not, but for me, that's kind of what I see.
So, for me, okay, cash value for sure is the easiest. If I have a policy and they're paying a couple $100s a month, that's the easiest to get them converted, okay? Second easiest, what would you pick?
What about it? Cash value group? No insurance.
Group, the second easiest? Okay.
No coverage. Yeah.
Who has a different number two? What? You can say it out loud.
No coverage.
No coverage.
What do you say?
I
Oh.
like small people.
Okay. Okay, and this is good.
She's right though.
She's right.
That birthday training did him in.
Never
been the same. Guy is a broken man.
That's all I hear.
He can't even answer. I'm gonna ask him directly. The first word, Tia. That's not one of the options.
So,
What's the problem if they have no insurance?
You have to get
It's a new bill.
yep, it's a new bill for them.
Okay. So for me, this is mine, okay? And this is my experience. I think the landscape of the market has changed. Cash value easiest. For me, group was the hardest, okay? Because people are this is just my experience, people are very passionate about their company and their job, and they pay little. See, when they have no insurance, it's still difficult, I agree, but they know they're riding dirty. They know they got no coverage. They know, I don't have anything. And so I can visually show them, hey, Esmaldo, what would happen to your wife and your kids do you know exactly what would happen if you died? And then he says, I don't know, or I'm not sure. I say, okay, we can kind of find out. And I do it, I finesse it where, you have $50,000 saved up, you're spending $7,500 a month, that would last 8 months, then what would happen? And I might find out how much money they're wasting in other areas, and then I can say, hey, why don't we put a couple dollars a day, $20 a week, $60 a month, whatever it is, and I can get some protection on it. That was me, if they have no insurance. Term was hard too. Term, because many times you're going in a few years later, and it's cheap, it should be about the same cost, and their health has gone down, they're a little overweight, they have a couple kids, obviously they're older, so it's hard to replace a term. Obviously, if I can get them more coverage, because they only have 100, I can maybe get another 100, but replacing it was hard. But group was the silent killer for me. That was the hardest one for me, okay? Because people, it's not when you don't have insurance, you don't have it, but it's not what you don't have, it's what you think you have and you don't.
Yeah.
That's what it was for me. Because it was hard for me to crap on their group policy. Because they get offended. Because they love their company so much. Some people. And so to extrapolate them from their company and their company from the insurance company that's insuring them, it was difficult. And so for me, if you can go in there and you understand group really well, you know, and at the end of the day, you want to be masters at all of these. I just wanted to see what people are seeing out there. So, generally, government insurance and benefits are better than private insurance. Is that true? So when you look at a company's benefits, would you rather work for a state or the federal government or a private company in terms of benefits?
Government.
Is that true? Who thinks it's private?
I said private.
It's government.
Yeah.
Okay?
I would
The government is infamous for people having the best benefit. They don't know what they do for work, but they know their benefits. Okay? And I'm being, my dad worked for the government. My daddy worked for the government.
And then see, sometimes you can lose that too.
All of it's shitty. But generally, it's better in the government, state government. And can you lose it in private?
Yes.
Can you lose it in private?
Yeah.
Can you lose it in private?
Yes.
Generally, government insurance and benefits are better than private. In fact, many private businesses offer no benefits. Okay. Now, some of these corporations that you see, they're big corporations, multinational, Lockheed Martin, government. They're basically an adjacent company to the government, but they're still not as going to be as good. That's why in our presentation we have the insurance, a group insurance from the state of Maryland. Okay. How many read their certificate? Okay. Now this is very important. You get a certificate. You don't get a policy. You know why you don't get a policy? Because you're not the owner of the policy.
Right.
The only person that has the policy is the owner of the policy. You have a certificate. So you can call your group insurance plan right now if you work, right? They will give you a certificate. They won't give you a copy of a policy because you're not the owner. You can make no changes. You know, Tia went over some great questions on Saturday. I wonder why they say on the front page, read your certificate carefully. Because one, most people don't read it. Two, it's a certificate. And three, because when we don't pay, we're going to reference this. Do you think there are things of importance in the group certificate that people should be aware of? I mean, think about it, and I do this too. I'm just think about it though, okay? You have children. You have young kids. They're your kids. You work. You pay your rent. You pay your mortgage. You pay your car payment. You pay your car insurance. You're working, like whenever I open up the op, I always say I operate on a few assumptions. I always say this. I say, number one, I think people work hard. I think people love their family. And people want to do better financially. I always talk on, and you need to operate from that too. People are working hard, they love their family, they want to do right by their family, and they have no insurance because they feel I have something provided by my employer and they haven't read their certificate. They don't know what's in the fine print. Employees don't own or control the group life insurance. So you very easily could find yourself without life insurance when you need it most. If your boss reduces the benefits or drops the group policy entirely, which I've seen both. I've seen companies reduce the benefits, and I've seen them drop the benefits entirely. You ever have a work for a company, right? Everybody's worked here, right? I mean, I'm assuming most people have had a job before, and you know, you got a little Keurig machine, right? You got a Keurig machine, and you got the pods, and you know, people like Jen, she just every day goes for the most expensive. Okay? Then you check the camera and she puts a couple in her pocket.
Stop.
And then they take the Keurig machine away. It was nice. It's a benefit. Well, we couldn't refill it all the time. You know, I have a company, right? It's a stupid company, but I have a company. I have a gym. We have a match for a 401k. The budget, it ain't there. It's getting nixed. They're not doing it. People aren't contributing. We have to pay just for the possibility to match. We're going to cut it. That's how it works. Okay? It's not in the budget. People aren't using it. We're going to cut the benefit. That's how it works, man. Have any businesses ever had hard times and reduced company benefits?
Yeah.
Next, your family's coverage is tethered to your status as an employee. When an employee leaves, their coverage ends. That's it. So now you have it, now you don't. Most people change jobs every 4.6 years, so gaps in coverage are not only possible, they are and I spelled that wrong, certainty for most people. Too many have an idealistic vision. They'll be working for their employer for a long time, but that's not statistically likely. What if you become uninsurable with a pre-existing condition right before you leave your job? The employee has zero guarantees. You know, that's something you should say. With ours, you're guaranteed coverage. People love that. They love guaranteed coverage. Doesn't matter what happens to you, it's guaranteed. Low and limited coverage amounts. Basic group term life insurance is often somewhere between $10,000 and $50,000. Since most employer plans are one size fits all, you may find that the benefits are not enough to protect your family against disaster. Your individual insurance needs vary depending on your debt, mortgages, college costs, the number of dependents you have, your goals, and most importantly, your income. In fact, employer insurance is often only enough to replace 1 or 2 years of income. Not the 10 years or more, which is so often what the family truly needs. Car, home, cell phone example. Right? What do I mean by car, home, cell phone example, right? You don't get Apple Pay and they don't fix your whole phone. You don't get car insurance and, I mean, if I do this, will this blow up? It may be cheap, it may be easy, but it's just not enough. Limited spouse and family options. An amount elected by the member in an increment of $5,000, subject to a maximum of $150,000. Spouse life insurance cannot exceed 50% of the member's employee term life amount. Might a spouse need more protection than $150,000 or 50%? Expensive, limited, or poor conversion options. Employees who leave can convert their policy, but many do not because they are older and they are not healthy. Insurance companies know that mostly the sickest employees convert their group life insurance and therefore make it extremely expensive. What is particularly amazing and disturbing is that you can convert to any type of policy except term insurance. Under both the full conversion right and the limited conversion right, you may convert your insurance to any type of individual policy, except term. Is that funny?
Yeah.
You can convert your policy to any shitty policy we offer, except the right policy. Actively at work. Okay, and I've seen this many times. What does actively at work mean? Actively at work refers to being actually at work. So some of them, like Walmart, right? I had a friend, Kelvin, you know, he's a manager there. He told me someone passed away, was looking through his group. You have to die going to Walmart, going home from Walmart, or being at Walmart. Well, they have millions of employees. You think they're going to pay somebody, go, hey, we're going to do this, and you got in a car accident because you were drinking and driving. You died. Why would Walmart pay you? Why would they pay? They say, no, we're offering this as a benefit, but you got to be coming to work, at work, or going home from work. What you do on your own time is up to you. No, that's why you get a private policy that covers you no matter what. No matter what. You produce a death certificate, doesn't matter where you are, how you died, we're going to pay. That's why you get a private policy. But a smart insurer knows they need some protection against covering lots of employees who are often sick with serious illnesses. I mean, if you're a big company, you have thousands. Everybody passes away. Everybody gets sick. All group insurance. One of the ways an insurer can do this is by ensuring that they only cover employees who are working normally and therefore fit and healthy. This is known as actively at work. All group insurance have a similar definition of actively at work. And AIG Life Group Protection defines an employee as being actively at work if they are either actively performing their normal occupation or taking leave other than sick leave that has been authorized by their employer, working the normal number of hours required by their contract with their employer, either at their normal place of employment or at a location as agreed with their employment or at a location to which they are required to travel for business. Mentally and physically capable of performing all the duties normally associated with their job. Some employment contracts have a clause that says the employee must be actively employed on the bonus payout date to get his bonus. That's normal, right? Why would I pay you a bonus? You're not here. You're not actively at work. So why would they pay the group insurance? Sometimes an employee with the clause in their contract is terminated before the annual bonus payout date and the employer refuses to pay the employee his annual bonus because he wasn't actively employed on the payout date. Thomas will send this out. All right, second week of September. Let's get to work. All right, team 1 3 1 2 3.